G'day guys, welcome back to the Devon Too Good Investing channel. In this video today, we're going to be discussing why Prosus is up over 18% today and how it's now looking in our net asset value calculation, which we will go over once we discuss why Prosus is up here today. And honestly, ever since it hit its 52-week low a couple of months ago of $40 per share, it's just been on a savage run. We're up about 50%, and if you go click on the link to my eToro portfolio below, you will see that I did purchase Prosus, I believe around $42 per share, so I am sitting rather pretty at the moment with a fairly short-term gain there. Nothing that I should get too excited about because of course it's only the short term, and I am a long-term investor. But if you're interested, click that in the description and let's discuss why Prosus is up over 18% today. So Prosus recently released their earnings, and during their earnings, they discussed their plans on selling more of their 134 billion stake in Chinese internet giant Tencent. And they're doing this to finance a buyback program, which in turn they're reversing a pledge that the CEO actually made earlier, saying that they were intending to hold on to their Tencent stake. However, Bob Van Dijk, the CEO, he says that we will keep selling Tencent shares to buy back our own. It's an open-ended and an unlimited program, he says. And they're going to be selling it at little bits of volume per day. So obviously, they're not trying to push down Tencent stock. Instead, they're trying to sell stock at a maximum of 2-3% of the daily traded volume for Tencent. So essentially what we got here is they've gone back on their pledge to not sell the Tencent stake, and a lot of Prosus investors are actually in it for the not only for that net asset value to close, but because they want to own Tencent for the long term. So I'm not too sure how long-term investors here will react. Obviously, short-term investors will be happy. They're doing actions to close the gap. Obviously, it makes sense to, if you can sell something, let's say they sold all their Tencent position today, they could essentially return all the shares or all that money back to shareholders, and we would make a nice profit. However, we lose the compounding effects when you sell a great business like Tencent, a business that will likely grow double digits over the next decade. We lose that now because they're going to be offloading bits of it. I don't know how much they're going to do it, but they did say it is an open-ended and unlimited program, so it's likely they'll do this until the gap has closed, and pretty much once the gap is closed, it won't make sense anymore to sell the 10-cent position any further. So pretty much this is a big moment because it's going to divide a lot of people here. There's going to be a lot of people obviously holding it for the 10-cent position, but then again, the stock's up 18% today, so no one's probably too upset, and if you don't agree with the decision, at least you can exit the position up 18%. So now if we check out Prosus's net asset value, you can see as of 27th of June 2022, their 10-cent position is worth over 135 billion. We've got a JD position in here worth 4.2 billion, Delivery Hero 3 billion, and then we've got some smaller positions here that together make up roughly 2 billion, and that gives us a listed asset total of 144.5 billion. And they've also got a bunch of unlisted assets. These are private equities or just non-public assets that they hold, including some classified assets, but they list it at 31.4 billion. They've actually got negative net cash, so they've got more debt than cash of 1.6 billion. That gives us a net asset value of 174 1.31 billion. And if we account for their latest shares outstanding number, put in the current share price, that gives us a market cap in euros and billions as well of 88.28 billion. So this was determined by pretty much timesing the price per share by the shares outstanding. And if we convert this to US dollars, so we have a fair comparison because this value over here is in US dollars, that gives us a market cap of 93.44 billion. And it pretty much means we've got a discount to net asset value of 46% or a discount to Tencent of 31%. And not long ago, this discount to Tencent was near 50%, and this discount to net asset value was closer to 60%. However, obviously the gap has closed a little bit. Prosus shares have outperformed Tencent, so when that happens, the discount's gonna close. In terms of when it probably isn't worth holding Prosus anymore, well, if you're holding it just for the Tencent position, which many investors are, including myself, look, as that discount closes, the risk of holding Prosus versus just holding Tencent stock, it seems as though, why would you take that extra risk just for a little bit of a discount? So as it closes, it's going to become more attractive to potentially sell and then just buy Tencent stock if it is at a decent value still. However, Tencent without the Prosus stake, you could argue, isn't all that cheap at the moment. It's probably a little bit undervalued, but you could probably find better opportunities, at least in my opinion. You've got to determine what works for you, obviously. If it got something to 15-20% discount, that's probably when I would feel really, encouraged to sell and move my money into a better opportunity. Well, I think I'm just going to sit on it for now and think about it over the next coming few days. Make sure I'm thinking rationally. Obviously, there are some benefits of the share buyback. If they're selling their 10-cent stake and they're able to buy back the Prosus shares, which is Prosus is pretty much Tencent in a way. Obviously, that's unlocking value for the shareholder there. But guys, it's a difficult one, honestly. But I'm gonna leave it there. I'm gonna think about it over the next few days. And thanks for watching, and see you in the next one.